Hello and welcome to Money, Me and COVID-19, where we speak to opinion leaders about the financial, the investing, the business and the social impact of coronavirus. My guest today is a well-respected wealth trainer, trader and entrepreneur who's trained thousands of people to trade the financial markets and cryptocurrencies to achieve the same level of financial freedom that he enjoys himself. His name is Marcus de Maria. Marcus, welcome to the show.
Thank you for having me. A great pleasure. Nice to see you.
Let's start with a kind of a macro view. What's your kind of overall take on the measures that governments have been taking to address COVID-19 and what that's doing from an economic and an investment perspective?
I mean, as a business owner and as an investor, I understand obviously what people are trying to do in order to minimize deaths. I do understand that, but just from a business point of view, it's a disaster. It's a disaster. I mean, I won't talk about my business, but I just look along the streets and I basically go along and say, well, that one's going to go bust, that one's going to go bust, that one's going to go bust. And if you think of the ramifications of that, just think about if my business went bust. I wouldn't be able to then pay my suppliers. They might go bust. It might seem small, but for them it might not be small, it might be huge. Then they can't pay their suppliers. The knock-on effect, Graham, is, I think, disastrous, absolutely disastrous.
And I suspect somewhat underestimated and understated, certainly in the mainstream media. You know, there's all sorts of talk about government measures, but there are so many companies and individuals who kind of slip through the net that I think people are massively underestimating the impact on business, and also what you described there is what I call the domino effect of one person going out of business and all the way down their supply chain being impacted.
Absolutely. And I know that there is a lot going on. The government's doing its best to communicate. This is new for the government. I understand that. I think people need to remember that. So it's not like that's what they were, elected to do. But it's not as, the communication could always be better. I think a lot of people don't realize about the grants that are being handed out, exactly where to get them. And I hear, quite frankly, that they're not that easy to get. So for example, when we say that a business is allowed to get a loan, well, quite frankly, the bank is going to then look at the assets of that business and say, there's no way I'm going to loan you money because I'm never going to get my money back. So unless the government actually guarantees 100% of the loan, I just don't think it's going to happen. And at the moment, the percentage of money that's actually going out there is tiny. I mean, we're talking about 1, 2, 3% of the money that's actually available. So it's not getting to the right people.
No, absolutely. And the banks have really been slow. I mean, speaking for myself, I approached Barclays twice at the start of this process, and they said, don't worry, once we've got all the information, we'll be there for you. I never heard from them again. What I'm hearing is, I think something like maybe 10 or 12,000 loans have been approved. Well, there are 5 million small businesses in this country. It's a drop in the ocean.
That's an absolute drop in the ocean, like you say. And I'm not surprised. Banks aren't, I'm not mentioning any particular banks, but the banking sector isn't exactly proactive when it comes to following up. And again, they are very wary right now, because think about it. Do they really want to give that many loans to companies that really, they're looking at it and going, well, hold on a moment, you're likely to go bankrupt, so why would I give you a loan right now? It just doesn't make sense. The government has to guarantee those loans.
And also, I suppose that there's probably almost a false sense of security among a lot of staff who've been furloughed, in the idea that it's all going to be just magically going back to the way it was before. I think it was quite revealing that companies last weekend were asking for that scheme to be extended, because otherwise they had to start this 45-day redundancy consultation process. For sure.
Absolutely. And we do want to get back to work, of course we do, but companies are going to need help. But what worries me is, where is all that money coming from? We're hearing about hundreds of billions, we're hearing about trillions from over the pond. Where exactly is that money coming from when you consider that we were already in debt before? So where is this all leading to? And I mean, you saw the markets, they just went down by 37% in just a few days. And I'm not surprised. And then they rallied all the way almost back up, especially the good companies. I think this is something we have to be very, very careful about. I think people are being exuberant. It's all going to go back to normal immediately. I don't think so, and that's not what I'm telling my clients right now. I think I think the markets are going to go down. I think that, you know, we've been in the longest bull market in the history of modern days. I don't know what happened in China in the Middle Ages, but basically, you know, since recorded history. And I just really do think that we are going to go into a recession. Some people say even more. I don't want to be overly negative, but certainly a recession. Come on. I mean, you know, and we had to have a correction. We've had a correction, but I think it's going to go further down.
I suppose one good thing, being a financial trader, this kind of volatility must be manna from heaven for you.
Right, so I'm not yes, as a business owner, as an investor, and I was very careful about my words, yeah, not good. As a trader, amazing, you know, because of the volatility. And I think some traders really got into trouble on YouTube a while back when they said, oh, we want the markets to go down because, of course, we can sell short, and all people didn't like that. But the truth is, as a trader, you make money going up and you make money going down, and the faster the better. So if things do go up and down, then that is great for a trader. And I must admit, it is good, which is why, by the way, we like cryptocurrencies so much, because you wouldn't believe it. The stock market doesn't really move that much. The foreign exchange market, however, does move a lot. And, you know, I tell people to shy away from that as a beginner. But the crypto markets are just so volatile, it's a joke. And right now we are seeing that kind of volatility in the normal stock market.
And so what kind of strategies have you adopted to trade that volatility, and how have you sort of trained your investment mastery members to take advantage of this opportunity?
Yeah, okay, so let me answer that question from a trading point of view, and then I'd like to also, because there's going to be some people probably watching that aren't traders, and I'd like to come at that from an investment point of view. So in terms of trading, you know, it's very simple. We're just trading breakouts. So wherever we see a natural low and it breaks out, we sell short, which means selling at the top and buying back at the bottom. And we always have this electronic order called a stop loss to make sure that we only ever risk 1% of our entire portfolio. So that if somebody had, let's say, £10,000, the maximum they'd be risking is £100. You know, and that's why I think people think trading is quite risky. It actually isn't, because you have this stop loss, and none of my graduates, for fear of me coming around their house and doing something, would ever dare go into the markets without this automatic stop loss in. So whether that's up or down, if we see it now, obviously what we are doing, Graham, as well, is we're looking at some fundamentals as well, because we do think that there are some companies that are more likely to be either going up or going down. So we're also doing that as well. We're not just willy-nilly just, you know, shorting everything and buying everything just because it breaks out of a range. You know, we're not doing that.
Okay, so I guess obviously, you know, trading is a complex area, and I think it's important that people understand that you need to know what you're doing, because you can make a lot of money or lose a lot of money if you're not doing it properly. But I guess are there sort of core strategies? You talk about breakouts there. Is there anything that particularly relates to different markets? So would you take a different approach in the stock market, say, to in the cryptocurrency world?
Not particularly. As a trader, we're just looking for market movement. Very different as an investor, where we're looking more for fundamentals, because we're probably going to be in the asset class or security for a medium to longer term. But as a trader, we're just looking for movements. Now, we're also adding another element where we're also looking at some fundamentals as well. But in the short term, you really don't need to, because the best company in the world can still go down in price, which kind of doesn't make sense, but it does if you think about it. And also, you know, the best company in the world might go down in price, and the worst company in the world that shouldn't even be in existence because of all the debt they have, and, you know, the net margins are going down, and, you know, their profits are sinking on a quarterly basis. That stock price could go up in the short term. So really, we are trading that volatility.
And I think one of the things that's really weird for me looking on at the moment is this detachment between the disastrous goings on in the global economy, people talking about the worst depression since the 30s, and markets going up. And in some cases, I think the NASDAQ hit new record highs. I mean, how can they be so disconnected?
Okay, so a couple of things there. One of the things is there's always a natural reaction when something goes down too fast. There's an opposite effect where the people who just maybe don't know any better, unfortunately, just for want of a better phrase, they will just go in and pump the market back up in the short term. And that's what I'm saying. So as it's come down and now gone up a little bit, in my opinion, the next move is going to be further down. And that, of course, is coupled with this promise of, again, quantitative easing, what is it, 3.0 or something, where they're going to start throwing money into the market again, which totally and utterly destroys the whole idea of capitalism, because I just don't get it. So are we a capitalist society or not? It seems to me we're not. We're socio-capitalist. I have no problem with that, but then just say that. Don't say we are capitalist, because I guess because of COVID, but it wasn't, because in 2008 they did exactly the same thing, but now they're blaming it on this, and it's always going to be something.
I know, and this is to me one of the taking your trader's hat off for a moment and putting your investor hat on. This is where I'm really struggling now, because the whole purpose of a market is what economists call price discovery, and it's a trade-off between buyers and sellers to arrive at what the fair price for an asset might be. But when you get this degree of government manipulation, how can you ever understand what that price should be?
I probably shouldn't be saying this, but at the moment, I'm a bit confused myself, Graham. Seriously. And that's why the trading is going extremely well, but the investing, we now need to have a look at what is it that we need to do in this market. So, for example, we have a strategy called the value cost averaging strategy, which is our take on the dollar cost averaging strategy. So instead of coming in, let's say, once a month, whatever the price is, up or down, whatever it is, with the same amount of money, what we say is fundamentally look at a really solid company that you believe can't go to zero. And then you wait for a drop, let's say 20%. Well, it went way beyond that, didn't it? 20%, and then start kind of feathering in at certain price points, which we know in advance. But right now we have a situation where oil, for example, which was something that I always thought couldn't go to zero, which we've made a lot of money on over the last few years, has suddenly come down so far. Now, before you say it has gone to zero, it hasn't gone to zero. The futures went to zero. So oil hasn't yet gone to zero, but it is so low right now that I am actually second guessing myself. And I have to stay strong for my team and my graduates, because I'm having to. It's almost like a new world order. What is actually happening? And that's not necessarily anything to do with COVID-19 even, because that's got to do with Saudi Arabia versus Russia. So things are mad out there at the moment. And I have to say, even though I've been in the markets for 20 years, when it comes to trading is going well, but investing, I'm a bit confused.
Well, a high street financial advisor would say that at a time like this, you have a flight to safety, and their definition of safety would be typically government bonds, which themselves are now being bought up left, right, and centre by the Fed. So what's your concept of a flight to safety at a time like this?
Obviously, one of the flights to safety is just staying in cash, although you can have an argument against, the eroding price power. But you can't do that. And the reason you can't do that is because it's too late. You should have gotten out before the crash came. So, and then if you go out at the crash, which of course, sadly, a lot of people do, then you wouldn't get that snapback. That's the word I was looking for, the snapback that always happens, always happens. Mm-hmm. And now we're going to have another leg down. Well, I believe we're going to have another leg down. When people see, the effects on businesses. And of course, we've just had the first quarter of the year, but that was only a little bit of the effect. When we actually have the reporting of the next quarter, that's when we're really going to see that effect. So for me, there's a couple of things, Graham. So one of the things I believe that gold and silver is something that needs to have an allocation, gold and silver. Now you need to decide whether that's physical gold and silver, which I do, whether that is ETFs, exchange traded funds of gold and silver. If you want to take on a little bit more risk, and I'm doing it in order, so therefore there's more risk, as I go down the list, which is an exchange traded fund of, for example, gold or silver miners. Okay, so these are individual companies, Actually, before that, oh no, the riskiest is still coming, which would be a mining company, just one. But of course, the question we always ask ourselves is, can this go to zero? And therefore, we prefer ETFs, which is like a basket of shares in which you have, let's say, 15 to 25 different miners. Well, the chances of all of them going to zero are zero. So, but one company, yes. And I think people say, oh, so if I now take a flight into gold and I buy a gold mining company, I'm safe. Well, you're not, because that's one company that can go to zero. And if you want to take on a little bit more risk on the ETFs, that would be junior gold, the small cap gold and mining companies. So there's some suggestions. I would also say cryptocurrencies. I would say that is the new way, or another way for people to fly into safety. Can I just mention one more thing?
Sure. Which
would be a reverse ETF. So for example, and that's something that we did, I'm very glad to say, and we've been building a position on that over the last few months, which is, so instead of selling the market short, you can actually buy what's called a reverse ETF. So in other words, when you buy it and the market goes down, your ETF value actually goes up, and vice versa, of course. But we value cost average in, so we were a negative for a while and kept buying, but of course when the crash came, we were quids in.
Okay, excellent. So I think what I'm hearing is, from the stock market perspective, as an investor, you'd be nervous because you think it's going down further. The bond market, from your facial expression, it certainly didn't look like it was your favorite investment. We've talked about cash and precious metals. What about the property market, Britain's favorite investment? Where do you see that going?
Okay, so I do have property, but I wouldn't say I'm an expert at it. So I wouldn't want to give my thoughts on that. I'd have to ask my wife. She actually is the one that runs the property portfolio. I mean, if you're looking to now start getting in right now, I would suggest I really don't know, but you might be having a challenge getting a mortgage right now. That's probably what I would say. One thing, just coming back to my area of expertise that I feel more confident talking about, is when you said about stocks, there are always going to be some stocks that are going down, but there's always going to be some that are going to be going up. So for example, anybody right now, or any company right now that has anything to do with online streaming, the Zooms of this world, which we happen to be on, for example, the Netflixes of this world, as people are looking what to do in the evenings, they're going to be doing much better. I also think you need to be looking at I don't want to mention any names, but there are examples, Alibaba, Baidu in China, and maybe Amazon, who are hiring hundreds of thousands of new employees as they're looking to help people who are just at home buying stuff, because of course you can't go into the shops. Give you an example, I work out at home. I can't buy any more weights. I'm obviously getting a little bit stronger. I know I don't look it, but I need more weights to put up, but I can't buy them because people are buying them. So they are doing very well. I would suggest that the supermarkets are probably doing quite well, especially the ones that are doing home delivery. And all I'm telling you is stuff that's happening to me. Sometimes investing is quite obvious sometimes. So for example, with a certain company I won't mention, I have to wait 2 weeks before I get my next delivery. So I'm losing weight. What do I do? I might actually have to go to a physical shop, Graham.
Oh my goodness, shock, horror. But let's talk a little bit about the business impact, because your core business, of course, is getting people in a room and training them. You've obviously had to make some adaptations in recent weeks. How have you gone about approaching this, social distancing world when you're very much about getting people together?
Yeah, absolutely. Our workshops, is all about small groups with computers and practicing. So it's the exact opposite of what we are being asked to do. And so, yeah, what you just said, I mean, we had to say, right, first of all, panic mode. Secondly, okay, what can we do? All that years of personal development. It's really funny because people always talk about personal development and they, how are you? And they go, great. And they think that's personal development. But actually, when a crisis happens, that's when the personal development kicks in, and that really shows you who people really, really are. And I have to say, our team really have reacted extremely well. They're working from home. We've had to furlough half the team, but we've had to do that. And we're subsidizing, by the way, so we are topping up so that they'll get their full salary. And so we've had to offer everything online and just support more. The very, very first thing that I did was to phone up. I spent the first 2 weekends, literally, 5 hours each, just phoning clients and saying, "How are you? Just how are you? Do you have any questions?" That's it. Not trying to do anything else. I guess that's because I felt a little bit, in my business with a bit. So I thought, well, how must they be feeling? And so I think that, you can calm yourself down by helping other people. I don't know. It worked for me. I don't know.
Okay. And obviously people have more time on their hands now. If anyone's sitting at home, perhaps having been furloughed, thinking this is a great time to take up trading the financial markets, what would your advice to them be?
Oh, wow. Okay. So my advice to them would be definitely to do it. Because right now it's difficult to go out and view properties and to do things like that. Right now, with the volatility that's happening, it's a great time. That's the first thing. Also, because prices have come down, even though they've snapped back a little bit, they're still down, and I think it's going to go down more. So therefore, now is a great time to start learning, to get ready. And thirdly, I would say, please learn how to do it properly. Please don't think that you can just take some money and throw it in the market and let's see what's happening. Well, I'm sorry, I'm sure you work very hard for your money. Please learn how to do it properly and have some education. And quite frankly, if you really believe, like some people do, that it's all free on the internet and you can download it and, you can't. It's like learning how to drive a car on the internet. Could you do it theoretically? I'm going to say, not really, right? I mean, theoretically you can. And then when the guy, and you didn't learn this because they didn't tell you this on the free course, kind of stops suddenly, what do you do? Oh, nobody told me what to do. So the reason it is such a good idea to learn how to do it properly is not just to learn what to do, but also to learn what not to do, to learn from experience, I think is so important.
So markets, we've talked about stocks and bonds and cash and property. Let's talk a bit more about cryptocurrencies. I know you've been very actively trading those. What's your strategy been for trading things like Bitcoin and the other cryptos?
Yeah, so the great thing about Bitcoin and the other cryptocurrencies, so the altcoins, alternative coins, is the fact that they're so volatile, which is great. But they are so volatile that when you have the stop loss, it does tend to take you out quite quickly. So therefore, we had to devise a strategy without a stop loss. Well, if that's the case, you can't sell short because Bitcoin could go up to 20,000, could do it in a few months, could even go up to 100,000. Some people are saying even more. Otherwise, they'll bite off their member. I don't know whether you know that story about John McAfee, but anyway. So what we have done is we've had a buying strategy, and we believe in Bitcoin. We believe in the future of a decentralized economy, and now it might be a good time that maybe people start looking at that a little bit more, and they are, by the way. So the strategy that we have right now, using an indicator for us to get in, we start feathering in. It's a kind of like a dollar cost averaging but we only get in only when it falls a certain percentage. And of course, because Bitcoin is so volatile and always goes up and down, we are making extraordinary gains. I mean, we're talking about hundreds of percents over the year. But would I suggest that there's something for complete beginners? I would probably say, yes, you can do it. Technically, you can do it. But from a mindset point of view, because of the volatility, you might suddenly go, oh, I can't handle it, and get out at the wrong point. That's the only thing. But otherwise, very profitable.
But I think there's another side to this, isn't there, which is that, as we've seen these amazing announcements about trillions of dollars being thrown at the COVID-19 issue, it kind of begs the question, could this be Bitcoin's time in terms of becoming a mainstream currency?
Absolutely. I mean, when you think about the things that are happening out there, countries saying that they're launching their own currency, like China, for example, digital currency. Now, it's a digital currency that's slightly different. And that's certainly not decentralized. That is very centralized. And I can see why they're doing it, because it's more control. That's not what Bitcoin is about. You have entire companies for example, Facebook's Libra saying that they are launching their own cryptocurrency. That is not a cryptocurrency. That is a digital currency. That is very different. That is very centralized and controlled by Facebook. It's the opposite of what a decentralized, for example, Bitcoin blockchain is. But what it does, you're right, it starts getting people much more aware about what people have been saying for the last 11 years. Most people don't even realize that Bitcoin has been alive for 11 years and getting stronger and stronger and stronger. And now is the case, I think, to be made about, is it time for us to start looking at, not a replacement, I think, per se, to start off with, I don't want to get anybody too nervous, but as a maybe tandem, parallel, and start looking at that. People always say to me, Bitcoin is a store of value. I agree, it's a store of value, like gold, yes, like a liquid gold. Oh, but isn't it going to replace gold? No, it won't replace gold. But in tandem, can they come together? Can they exist together? I think they can.
Okay. So finally, Marcus, obviously you've got a young family. Have you got any tips for maintaining your sanity during lockdown? How are you coping?
I think that's an interesting one. I think routine is very, very important, Graham. So one of the things that we've done, and just a quick one, we've actually, for all of our clients, we've offered free morning trainings, with my personal trainer. And so it's a high impact training some of the days, it's yoga some of the others, and some love it, some didn't take advantage of the offer, but some love it, and it was in order to start that routine. And starting with that. So for the kids, and more for me really, is to have, we're fortunate enough to have a nanny. Obviously she's not there, but she calls in, and we're having a lot of homeschooling. We're making sure that they even have their little breaks at certain times, and we prepare their little lunch boxes to try and get them as much into the routine that they were used to as possible. I'm playing a lot more with them. I'm actually connecting a lot more with my children. So here's the silver lining, actually, which is that, I should have taught I bow my head in shame here. Okay, so I should have taught my kids, I've got 2 girls, how to ride a bike a long time ago. Because I travel a lot, I haven't managed to do that. I'm squirming here, I'm a bit embarrassed, but now I have. And honestly, it's been amazing. It's been wonderful. So I've really bonded with them, which is wonderful.
Fantastic. Okay, well, thanks for everything you shared today. Thanks very much for joining us, Marcus. All the best.
My great pleasure. My great pleasure. Look after yourself.